the Big Island.
Ooh, I like that.
Right, or drive a Kona.
Waikoloa. I like that. I like that part, yes.
Fantastic.
Or the Hilo side of the island.
Suisun Fish Market in Hilo, which is the best fish I've ever had.
I don't know.
But I've seen better markets than this.
Mama's Fish House in Maui, still my favorite. Anyway, so let's talk a little bit about the navigation side of things right now, because we are seeing a little bit of that momentum losing out. Most of the banks are in the green today, with one exception, and it's JPMorgan Chase, but it's just slightly lower. So could JPMorgan Chase, which is a bellwether of the global banking business, be able to continue or slide a little bit more? And how much of the worst is actually behind us? Joining us now is Tony Zhang, the chief strategist over at OptionsPlay. He sees more downside for JPMorgan Chase and is here to tell us why and then how to play it. So why the more, I guess maybe bearish is the strong way to put it, but why are you a little bit more negative on JPMorgan than other parts of the market?
Yeah, I mean, really, if you look at the charts here, I think the charts speak a lot in terms of we did have earnings coming out last week, which were more positive than analysts were expecting. But despite that, we failed to get back above prior highs. We effectively continue to have a series of lower lows and lower highs. That speaks to the fact that despite the strong earnings, it wasn't enough to reverse the overall trend that we've seen here in this particular stock. And if you just zoom out a little bit more, you really have what looks like a bit of a head and shoulders top that's starting to form here for JP Morgan. Not to mention just the valuations on JP Morgan is certainly on the higher end for the banking industry right now. And given the outlook that they've kind of, Jamie Dimon has provided here for 2025, it certainly strikes a much more cautious tone here for the economic conditions ahead. Q4 earnings, they were much more upbeat, much more positive in terms of expectations for the economy and just the strength of the bank. And you note that this particular earnings cycle, they really spoke about a much more cautious economic condition, usually due to tariffs, trade wars, higher inflation. They announced all of these things within their more cautious tone for 2025. It was balanced out by some positive with potential positives with tax reform and deregulation, but largely there was a much more cautious tone that they had for the earnings, for the outlook that they provided for this particular year. So, when you look at the charts, you look at the outlook they provided, which usually sets the tone for earnings season. We also had Delta report earlier this year that really set a much more cautious view for consumer spending for this year. I think when you look at everything in combination with each other, there's a much more concern about the economic conditions ahead. And for those reasons, I think it makes sense to take a much more neutral to potentially bearish view here for a major bank like JP.
So what's the trade? After all of that, what exactly is the trade for JP Morgan?
Yeah, so what's really interesting with the market dynamics right now is that if you go out to that May 30th expiration, which is a weekly expiration, if you sold the 235, 250 call spread, normally by selling a 45-day out-of-the-money call spread like this, you can collect about 1/3 of the width. So on a $15 wide credit spread, you can collect about $5 in income. But right now, you can actually collect over $7 in income. So I think there's an interesting ability to take advantage of the elevated implied volatility and collect some extra premium here to take that neutral to bearish view here for JP Morgan. It's a very unusual market, but you can have a near 1-to-1 risk reward ratio right now.
All right. Tony Zhang with the trade on JP Morgan Chase. Not outright bearish, but certainly not bullish on it. Thank you very much. We'll see you later on.